What we're going to do today is we're going to look at trends and how we find good quality trends effectively. All right, so this is actually a basic skill set. Two things we have to understand. We have to understand what we're looking for and how to find it efficiently. As a trader, and one of the things that I believe distinguishes good traders from like rookie retail traders is that a good trader is looking for a specific setup, and they don't really care where they're finding it. When you're trading securities, no matter what the asset class or what securities they are, right, it's going to change all the time. Like what's working changes all the time. And what you need to do is know what you're looking for and be able to go out in the universe of securities and find that particular situation. A very common mistake, that's why I bring this up, is that what people tend to do, especially if they're starting off, is they tend to try to find or look at securities that they're comfortable with. It could be Apple, it could be euro dollars, it could be crude oil. But there's always this belief that, if I just know this one security really well, or I really understand what's going on, then I'm going to trade it and trade it much better. That's a common misperception, right? Because there's not always going to be a setup, and it really positions you to overtrade and do trades that you shouldn't do because you really want to trade that security. You think you see things. All right, so what are we looking for? Well, when we're trend trading, right? So we're not talking about mean reversion trading, we're talking about trend trading. When we're trend trading, we're looking for a security with a specific type of structure. Now, I found a couple examples, and let me start with this one. And actually, what I'm going to do is I'm just going to get this totally off here. Let me go ahead and let me just show you an example of what I'm actually looking for. And there's really two kind of templates. Now the examples I picked today are actually both down, they're shorts, but that's just a function of the market that we're in, which is another thing. The market, these are shorter term trades. I'm using 65-minute charts, and the if I look in this time frame, 65 hour, I'm not going to find too many good uptrends. And that's only because the market's been very heavy and very weak over the last couple weeks, actually. So we're not going to find a lot of good structure on the long side. We are finding some good structure on the downside. All right, so when I say good structure, what am I talking about? I'm really looking for, again, two particular situations. And this is what I'm talking about when I say good structure. Now, if you go back to my video on data structure, you'll see the reason why we tend to see this sort of shape. It has to do with, and if you go back to that video on data structure, it has to do with the way the data is formed, the impulsive moves, and really the way things move is we have these like large standard deviation kind of pops that come up in the data, and they're interlaced with noise. So data is mostly noise interlaced with these big pops. And if I erase this for a second, the way that tends to look is something like this. And say the downtrend, you get a pop down, noise, and then another pop, noise, and then another pop down in a downtrend. And what you end up with here is a structure that looks something like this. And I'll make that a different color. Let me make that, I don't know, green. And that's why we draw that structure like that. So if I take that out, this is what the data kind of would naturally look like. Even that's a little neat. And that's why we end up kind of always showing this right here as the template for what we're looking for. That's just a representation of the way the data actually forms. Now, what we're actually identifying here is either a negative self-reinforcing feedback loop which in a downtrend it's a negative feedback loop, or an uptrend it's a positive feedback loop. Right? So that's what's happening. And the loop is being created by these periodic impulsive moves that pop up in the data. And you see it form generally shaped like this. So what we're really looking for here is this series of impulsive and corrective, or sequence of impulsive and corrective moves. The impulsive move being the strong directional motion. Interlaced, that will be interlaced with this garbage, just noise is the best way to describe it. It's just staticky noise, impulse, noise, impulse, noise, impulse. Okay, so we end up with this sort of template that we're looking for, impulse and correction. So when we look through the charts, what we're really looking for is a self-reinforcing feedback loop, and the shape of the data will tell us if that's possibly what we're looking at. Okay, now this is just one general shape I'm looking for. Another one I'm looking for is when there's a reversal. And I'm going to keep this really simple. I'm not going to get into all the minutia of it. I think right now that would just be confusing. Let's just keep this as a really basic lesson. But a reversal might look something like this, where I have, say, a trend going in this direction. Now that's one of the shapes, or that's the structure that we're looking for an uptrend, let's say, right? Now, if I take that, let me make that red, and I break it. So what would have to constitute a break would be a move below this point right here. And this is an impulse, correction, and this is the last impulsive move. The turn right here, or the pivot at this last impulsive move, let me see if I can highlight that for you. Awesome, I can't find any of the shapes. This pivot right here is what we call a control swing low, right? It could be a control swing low, a control swing high in a downtrend. All right, we'll put that on there. And there you go. That's the control swing low right there. Now, a break of that control swing low would constitute a change in the trend. And what I'm looking for here would be this. Notice that starting from this point right here, there's the high. Once we break this control swing low, so there's a break of the control swing low right over here. Once we break that will nullify this uptrend. So this trend right here is now nullified. Now, what we're looking for is a new possible downtrend. The clue being that we broke this control swing low. That's one part of it. The other part of it is we really need to see an impulse and corrective sequence formed, indicating that there's a new trend. So if I start from this point and I back up, it's impulse, correction, impulse. 1, 2, 3, A, B, C is what a lot of guys say. All right, now I like this structure a lot, especially when I'm shorting. This is one of my favorite short trades. The reason is I like it. I like to short this more than I like to go long. It works both ways, obviously, but shorting it's even better. And the reason is, this is one of those situations where a lot of traders are long a security, and fear is a more powerful force than greed. And once you start breaking this control swing low, they start realizing that they've got a problem with the security, and it tends to generate a lot of selling. So this is like a nascent or very early downtrend, and that's the best time to short it. So that's what I'm looking for. So the two things that I'm really looking for are just a good trend structure like this, and looking for this to continue. You know, say it's an uptrend, it looks like this, and you'd be anticipating that it would continue what it was doing. Or I'm looking for some sort of reversal, and a very simple and effective reversal to look for is when we break a control swing low or control swing high, and you have structure going in the other direction, like you have right here, like this piece right here, and that piece right there, and you're now trading in this direction. So it's a short. Okay. So those would be the two things that we're generally looking for, longs and shorts that fall on those two templates would be a really good place to start. Now, if you look at Walgreens here, you can see that this is a pretty good downtrend on the downside. I mean, this is like a really mature downtrend, and to the point that you have to worry, you know, is it almost out of steam on the downside? And we'll talk about how to determine when a trend runs out of steam. But in this case, you can probably see the shape I was talking about. Now, whenever we do this, we don't start from the top. We start from the low. If it's a downtrend, we start from the lowest point. So it'd start from here and go like 1, 2, 3. You can see it right there. And you can see how that continues all the way through here. Impulse, correction, impulse, correction, impulse, very strong impulse, correction, impulse. And you can see that the trend is definitely going in that direction. So this is a short. And what we'd anticipate here hasn't happened yet, but if I'm doing a trade here, I see what it's doing. I'm assuming there's a negative feedback loop in effect here. And you know, essentially, like a simple way to explain a feedback loop, and they can come up for a lot of reasons. That's a more in-depth subject. But just think of it simply like it's going down, so people want to sell it. They don't want to buy it because it's going down. More sellers than buyers. It feeds on itself in a self-reinforcing feedback loop and creates this downtrend. Now, in this situation, what I would be anticipating is that it would do something like this. Now, I don't want it to break. This is, again, what I just talked about, that control swing high in that case. I don't want it to break that. I need this move to be corrective, not impulsive. And I'm looking for another correction that possibly gets me into the trade, and then a impulsive new low that is made off of this move here. All right, so that's one example. Another example is what I just talked about as far as a reversal. Right, and if you look here, let me pull this together a little bit. You can see, I'll get rid of that. What had happened here was a pretty good looking uptrend. This is a little funky right here. Where this was a little lower than this. You could argue with me that that was a control swing low. I'm just gonna do this for now. All right, I don't want to get in the way of the lesson. This would be the control swing low. This is the high. This is Lennar. It's a housing stock. So guys are really pushing on these housing stocks to the upside. And you can see here, if you look right here, this stock was going up pretty strongly, right? If I just cut it off right there, that's a pretty good uptrend and seems very bullish. Now, what ended up happening was it stopped right there and worked its way down to the point that it broke this control swing low. So let me get that off of there. And if I look at this now, I have a broken control swing low, which means that this uptrend here is dead. And something has changed. And I have structure going to the downside. Now, probably in this case, the structure, I'm going to make it simple with this 1, 2, 3 right here, where this is the impulsive move, which it is no matter what. You could also draw this like this. You could say this was something like more of a time correction, you know, where it goes sideways. And by the way, let me explain that. There's really two basic types of corrections. There's a price correction. That's what this is right here. It goes 1, 2, 3. There's a pushback. We call that a price correction. And then there's also a time correction where you have more of a lateral sideways movement. Like it's not able to push up. It's sideways. A time correction is actually stronger, right? Because the pushback wasn't able to really move prices. It just really turned to a stall before it broke to the new low. So you could look at this one and say it was a drop sideways and another drop. I think it's neater for the purpose of our conversation here to just call this a 1, 2, 3 from this point. Here's the low, 1, 2, 3, and in either case, however I did it, I would still be looking at this area right here as my last impulsive move, which is very important to our trade when we actually go to set the trade up, because what we're anticipating is this, and this hasn't happened yet, but what we're anticipating is a push against the impulse, possibly, and then a new move to the downside. Could it be sideways? Yeah, we'll deal with that if that's the case, but let's just say for now, 1, 2, 3 down, and then we anticipate another 1 down. This is 1, 2, this is the corrective move, 3 to a new low, another impulsive leg. So what we're trying to do is anticipate this change right here, which is the, let me see if I can find some drawing tools. Okay, I'm trying to anticipate where this change is gonna happen, that turn. So we'll talk about how to figure that out later. And if you see the video I did on trade construction, you can see that. I'm going to get more into depth on how to use those tools that I used in the video. But the first thing we really need to talk about is trend, obviously. Okay, so those are the two templates that we'd really be looking for. Again, one is a solid straight trend, impulse correction, very similar to what we see here in WBA. I don't know what this stock is doing wrong. This thing is constantly under bearish pressure. And then the other one is a reversal where we have a strong uptrend that gives it up and starts forming something to the downside or structure to the downside, which we want to take advantage of. In this case, down, could be up. Again, everything goes both ways. All right, so how do we find this? Like, we know what we're looking for now. That's what we're looking for. Right? How do we find these things? All right, so here's the proper way to find trends. I really recommend getting a software package that allows you to move through a list of securities and be able just basically to flip it like a book. The one I use is TC2000. There's other ones. I think Thinkorswim has this feature now. I'm not totally sure, but if you can find something that does it, you really want to do that. The reason is, I know a lot of traders, and they all use some version of a software package that allows them to do something like this. And you want to be able just to flip through the securities really quick, like this. Now, you don't want to be stuck in a position. In this case, I got the S&P 500 selected here. Let's say I put the Russell 1000 up. I can look through 1,000 stocks fairly quickly, but I want to get right to what I'm looking for, especially if I'm day trading. I need to be able to find securities that are doing the things that I'm looking for in a quick manner, especially if I'm trying to time it with the indexes, which is a subject we got to talk about. So if I see something happening in an index that suggests that there could be something that may correspond to that in the equities, trying to find an individual equity to tie up with that, I need to be able to get through this list very quick, or bring the trades that I'm looking for to the front so I can find them quickly. So how do I do that? The first thing I do, and you may not be able to see it right here, but there's a little filter here for in TC2000. You can have these columns, and you can look for different characteristics. Now, I'm just going to talk about two of the columns that I'm looking at right here. These two right here. Now, this column is a custom formula that I have. It's a absolute relative strength, blended relative strength over 1, 3, and 6 months. Now, here's the equation for that. All right, so this is 1, 3, and 6 month blended relative strength, comparative relative strength, and close times, and this is bracketed 2 divided by close of 21 days, 1 plus 1 close of 63 days, that's 3 months, and then close of 126, that's 6 months. Okay, and that's the equation that I'm using right there. And what it does is it looks at the securities that are the strongest over that 3-period, that 1, 3, and 6 month blended period there. And what happens is, if I pull this up, let me pull this over, I'll get all the securities that were the strongest. Now, they may not necessarily be in uptrends, but I have a better chance if the number is large of them being uptrends, or if I want to find downtrends, I just reverse the column and I find stuff that's in downtrends. Now, the market's been really weak, so the uptrends, here's the uptrends. The strongest stock over that 1, 3, 6 month period is Carvana, right? This came off of a sub $10 number down here and went all the way to $50. That is a hell of a move right there. So it's scoring high. Now, this doesn't look like what I'm looking for. As a matter of fact, this looks like the second. This doesn't look like a good uptrend. It looks like a possible reversal. So that's good. That's something I can use right there. I'd like to see this break a little lower. And then I can just work my way through these stocks. Like, this is a pretty good looking uptrend. That's APP. That's still holding on. VRT. Now, I should say one more thing. I'm looking at these time frames in a 65-minute time frame. So you can change that, obviously. And for this indicator right here, it's not so time sensitive. Like, I can go to daily and get the same idea. The time's going to come in on the next part of this. That's going to be really important. But I should see relatively strong stocks when I do this. Here's a reversal right here, just like we talked about. It's an interesting short, actually. I'm going to flag that one. All right, there's all the longs, possible long trades, and I reverse it. I find possible short trades. That AMC is falling apart right there. Has been falling apart. Solar Edge, so here's all the down trades. That way, all the really strong stocks will pull to the top real quick, or the really weak stocks, and I can get those candidates kind of right in front of me real quick. Now, the second tool I'm going to use here, and you can actually use these two together, is the MACD tool. That's the MACD tool indicator right there. Now, a lot of you guys know what a MACD is. A lot of people don't use it the right way, but I kind of, in this context, I'm using a MACD not to give me a trading signal, but just to guide me to strong trends. So if we look at what a MACD even is, it's two moving averages, right? Two EMAs, exponential moving averages, it front weights the moving average. A 12 period and a 26 period is standard. There's no reason to change that for what we're doing. And when the fast moving average, in this case the blue one, is above the slow moving average, in this case the red one, you can see this MACD has a positive histogram. That will produce, in the way we're looking at it, a positive number. You'll see that. When it's below, when the fast moving average is below the slow moving average, it'll produce a negative number. Those positive and negative numbers are what they use to make the histogram. We're going to steal that, and what we're going to do, if I can find it, is we're going to put that MACD indicator in the screener in the same time frame that the chart is. Now, the chart I have right here is in 65 minutes, and the MACD indicator here is in 65 minutes. In TC2000, you just change it. You just click on it, edit column, and I can change the time frame right here. All right, I'm going to leave it at 65 minutes. Now, if I go ahead and click on that, I can find the number. The number doesn't matter. It's just that it's positive or negative. So in this case, I click on top one, Berkshire Hathaway, and I can see that in this time frame, 65 minutes, it is a uptrend. And Fabrinet, the stock's ripping right there. That's in a 65-minute uptrend. NVIDIA, obviously, and you just go through these things. Now, they don't have to be in an uptrend. The number can be positive, but like in this case with CMG, it's giving it up. It broke the trend. It's starting to roll over a little bit. Right? So what we're looking for is a situation more like this. This is that Fabrinet. That's something that we might want to trade. right? And I can just work through that group until I see things that I like, but all the ones, they should pop to the top. And let me reverse it real quick. And you can see here, we can see downtrends in this case. You can see this was up. It actually hasn't broken the control. Oops, get back to that. It hasn't broken the control swing low, so it hasn't changed yet, but it's getting a negative reading because it's starting to roll over. You can see this is starting to roll over. It hasn't broken down just yet, but it's starting to. This is a stock that blew up, right? Now, this is all the bearish ones. AMC, obviously, you see that's dropped a lot. And you can just go through them like this until you find a good trade with structure. That's what we're looking for, that we talked about before. Now, another little trick here is if I sort this, say, to the weakest. All right, so here's the weakest relative strength stock. And if I have a weak relative strength stock, so this list is now ordered by relative strength, weakest to strongest, and I have a negative number at the same time, I tend to get some pretty good trades for downside, and vice versa. I can just reverse it for longs. So in this case, AMC is the weakest stock on a relative strength basis over this time frame, and it's got a negative MACD number suggesting that it's in a pretty good downtrend. SolarEdge, same thing. IEP, same thing. Pod, same thing. Roblox, same thing. Enphase, same thing. All right, so that gave me an additional, when those two things correspond to each other, you're going to find right away some really good trades. And let me reverse that. So for longs, all right, so Carvana is the strongest stock, but it's got a negative number there, right? So maybe something like VRT, okay, a little better looking chart. APP's got a strong relative strength and a positive number on the MACD, and that's a better looking trend. So you can, SMCI this is a little choppy. I don't know about that one. That was agreeing, but again, the price action has been choppy. Nvidia is a good example, right? Just made a high. It had a bad day today, but made a high off of it, and the trend's still intact. All right, so that's something to look at. Whereas Wayfair was strong RS, but recently it's been going down. The structure doesn't look good. It's got a negative MACD, not the best candidate. All right, so you can use those two things together to find, and again, remember what we're looking for. We're going through these to find stocks with good structure. Like that's a good structure right there. 1, 2, 3 to the upside. FN. All right, now, very useful tool. I use it every day. Very, very useful tool. Once you find something, and I use that method to find like Lennar, right? All right, so once you're here, what you're doing now is you're looking at the structure, and you got to mark the structure up so you can see it clearly. But we're trying to anticipate further structural development. Now, I know I explained that a second ago, but it's worth repeating. If you look right here, 1, 2, 3, breaks the control swing low, so we're looking at a possible reversal right here. The anticipation is that, and I'll do this in a different color here, the anticipation is that the structure you identified here will continue, and let me make that green so I can tell the difference. The structure that you identified here will continue for another move. And we're trying to use, a lot of times, the corrective action. And corrective action can take a lot of different shapes. It could be some sort of continuation pattern. It could just be a push up in a trend structural move against the last impulse move. So, on a case-by-case basis, it depends what we're seeing. We'll talk more about that. What we're trying to really do is capture or get positioned for this next impulsive move down. Right there. Like that's our goal. Our goal is to enter the trade at a strategic location so that we can possibly pick up the next impulsive move. Most of the movement, most of the action that's going to happen is let me put it this way. Let me say it a different way. Most of the action is going to be corrective. Most of the time, the market's doing all this kind of stuff where it's just going sideways, wasting time, back and forth. It's the noise state. The only places you really make money is by capturing the impulsive moves. So being there before the impulsive move happens, or being clever about how we get positioned, is how we're going to benefit here. We're trying to capture the next development in the trend. So Lennar is a good example of that. WBA is a good example of that. So where we are right now with WBA, let me get this out of there. We got a lot of structure here. There's no signs of reversal. It would have to break above 26 to give us a clear sign of reversal right there. That's the control swing high. What we're going to anticipate is that we're going to see some sort of corrective move. Now, we'll talk about trying to figure out where this is. It's a different subject. But we're going to try to figure out where this corrective move or this structure is going to take us back to the upside, possibly. And then we're going to try to position ourselves in front of this impulsive move down. So the whole thing about finding trend is the anticipation that it's going to continue, that the structural components will continue, and that we can take advantage of that anticipation and knowledge. Now, there's more to this. There's going to be a lot of clues about where trends end, how to figure out where the turns come in, etc. But don't forget what you're looking for. We're looking for trend structure, and that trend structure gives us a clue that there's a self-reinforcing feedback loop in play. And that's a very powerful force in making money. Don't fall in love with the stock or the story. Fall in love with the trend. It would be my advice. Right? Find trends, find trend structure, and trade off of those. Okay, I'm going to stop right there, and we'll get back together. Now, the next video I'm going to make is going to be on some of the tools that we'll use to sort of anticipate these turning points. I'll show you some of the stuff that I use, and we'll see where it goes from there. Okay, thank you.